Welcome to the deep dive. Today, we're really diving into Bitcoin. It feels like it's at this critical crossroads right now.
Yeah, it really does. Just sort of stuck in this intense consolidation phase.
Exactly. And there are these powerful forces pulling it, in completely different directions.
That's right. If you're following the digital asset space, you definitely feel that tension. On one hand, you've got some pretty good tailwinds.
Like what?
Well, encouraging signals from the U.S. Federal Reserve, for instance, and actually some pro-innovation regulatory moves happening here in the U.S., which are, helping the industry.
Okay, but then there are the headwinds, big ones.
Oh, definitely. We're seeing substantial capital outflows from those spot Bitcoin ETFs. That's a big factor. And just this persistent macroeconomic uncertainty, especially around things like U.S. tariff policies.
It really is a tug-of-war.
It is. So our mission today is to try and unpack all this complexity for you. We want to show how these different but deeply connected themes are creating this, well, frankly, fragile market structure.
Where Bitcoin's fundamental strength is really being tested by all this immediate selling pressure.
Exactly. We'll give you a more nuanced look at where it might be headed short term and what its longer term potential still looks like.
All right, let's start with the macro picture then. These economic forces driving the price action recently, it's not simple.
No, it really isn't. Take the market's reaction to Fed Chair Jerome Powell's speech at Jackson Hole.
Huh?
That's a perfect example of the complexity.
What happened there?
Well, Powell sort of started to pivot his language. He moved away from just focusing solely on fighting inflation. He acknowledged downside risks to employment and talked about a curious kind of balance in the labor market.
Okay, and the market read that as?
Pretty much as a strong signal for a potential interest rate cut. Probably at the next, the September FOMC meeting, futures markets priced that possibility in at nearly 90%.
Wow, okay. So that's normally quite bullish for risk assets, right? An interest rate cut usually means easier financial conditions.
Exactly. That should fundamentally be good news for something like Bitcoin. And you saw traditional markets react positively. The S&P 500 gained about 1.2%. Treasury yields fell.
But here's where it gets weird for Bitcoin.
Right. Bitcoin did initially rally. It popped past $117,000 right after the speech.
But it didn't last.
Not at all. That optimism was incredibly short-lived. The gains were totally erased over the weekend. Selling pressure, maybe some profit-taking. It just took hold.
It really shows how these, immediate market headwinds can just stomp on positive macro signals sometimes.
Absolutely. And that brings us to another force at play, tariffs. Powell actually mentioned this too. He said the effects of tariffs on consumer prices are now clearly visible.
Okay, so more inflation worries.
Yeah, that combined with general inflation concerns, maybe some weakness in equities, it intensified this whole risk-off feeling. And that puts downward pressure on crypto.
We've seen this before with tariffs and Bitcoin, haven't we? Like back in early 2025.
Yeah, there's precedent. Bitcoin fell pretty sharply after tariff announcements then. So in the immediate term, tariffs create uncertainty. Investors get nervous. They pull back from speculative assets. Bitcoin fits that bill for many.
Right.
But here's the interesting twist, the duality. While tariffs cause that short-term risk aversion, the actual inflationary pressure they create, plus any related geopolitical tensions, well, that actually strengthens Bitcoin's long-term story.
I mean, the digital gold narrative.
Exactly. The idea of a non-sovereign, censorship-resistant store of value becomes more appealing. If the dollar weakens because of all this, Bitcoin potentially looks even better as an alternative over the long haul.
So putting it all together, where does that leave the price right now? It sounds like it's been under pressure.
It has. In the last 24 hours, the price actually broke below $112,000. It even dipped under $111,000, hitting a near 6-week low.
Ouch. Wiped out the Powell rally gains then.
Completely. And this followed some significant deleveraging in the derivatives market too. About $116 million in long positions got liquidated. Forced selling.
So technically speaking, the short-term picture isn't great.
No, from a technical standpoint, it's turned negative. You've got immediate resistance around $113,600 and a bigger hurdle near $114,000.
And on the downside, where's the support?
Critic levels are around $111,500 and then $110,650. If those break, we could potentially see a slide down towards $108,500.
Okay, but you mentioned underlying strengths earlier. It's not all doom and gloom if you look a bit longer term.
Correct. There are some on-chain metrics that offer a more, let's say, constructive medium-term view.
Like the MVRV ratio?
Yeah, the 30-day market value to realized value ratio. Basically, it compares the current price to the average price people paid for their Bitcoin. It's fallen into a range that, historically, often suggests Bitcoin is undervalued. Sometimes these levels coincide with price bottoms.
Interesting. Anything else?
Well, transaction fees are actually super low right now, lowest since 2011, apparently. Yeah, it makes using the network cheaper, which is, good for adoption.
And what about sentiment? Is everyone panicking?
It seems to be stabilizing a bit. The crypto fear and greed index moved up from fear to neutral. It's at 47 now. So maybe the worst of the panic selling phase is easing off.
So the bottom line for this section is the market's paying way more attention to crypto-specific stuff right now, like the ETF outflows and liquidations.
Pretty much. Those immediate factors, like the $1.17 billion pouring out of ETFs and the $116 million in forced selling, they're outweighing the forward-looking macro signals like Powell's potential pivot.
It's like fast money selling versus maybe slow money thinking longer term.
That's a good way to put it. Fast money is reacting now, maybe taking profits or de-risking. Slow money might be looking at this as an opportunity down the line.
Okay, that fast money versus slow money idea is fascinating. Let's dig into that more because the institutional picture seems really mixed, almost contradictory.
It really is. And that huge ETF outflow is the prime example of the fast money pressure. We saw a net outflow of $1.17 billion in just 5 days, August 18th to 22nd.
That's the biggest weekly outflow since way back in early March, right? A huge reversal from the inflows we saw before.
Exactly, a stark contrast. And we're talking major funds here, BlackRock, Fidelity, seeing significant outflows. One day alone saw $523 million leave.
So that tells us a big chunk of ETF investors are hitting the sell button, maybe taking profits from the run-up to 124K, maybe just spooked by the uncertainty.
Whatever the reason, that selling pressure is real, and it needs to be absorbed before the price can really recover sustainably.
Okay, but then there's the slow money side, the counter narrative. What's happening there?
Well, you see strategic corporate adoption continuing, almost unfazed. Take the Japanese firm Metaplanet. They just bought another 103 Bitcoin.
How much do they hold now?
They're up to nearly 19,000 BTC, worth around $2.2 billion. And they're financing these buys through things like stock acquisition rights, showing it's a long-term treasury strategy.
And didn't something else significant happen with Metaplanet, FTSE related?
Yes, exactly. This is really interesting. Metaplanet is being included in the FTSE Japan index starting in September. That's a big deal.
Why is that such a big deal?
Because it forces passive index funds that just automatically track the FTSE Japan index to buy Metaplanet stock.
So it creates this indirect, steady institutional demand for Bitcoin via Metaplanet's shares?
Precisely.
Yeah.
It really starts to blur the lines between traditional equity investing and digital assets. Very clever.
And they're not the only ones buying, right? Strategy, formerly MicroStrategy.
Still at it.
Yeah.
They just announced buying into the 3,081 BTC. Spent about $356.9 million between August 18th and 24th.
Wow. What was their average price?
Around $115,829 per Bitcoin. So they were buying as the price was coming down.
That really shows conviction. How much do they hold now? It must be enormous.
It is. They're up to 632,457 BTC, valued at over $70 billion now. Still the largest corporate holder by a huge margin. And yeah, funding it by selling stock shows a core long-term belief for them.
Okay, so we have ETF outflows, but corporate inflows. What about the infrastructure side? Anything happening to make institutions more comfortable overall?
Yes, actually. Something quite significant on the security front. TRM Labs, a blockchain intelligence firm, just launched something called the Beacon Network.
Beacon Network, what's that?
It's essentially a real-time crypto crime response network, a first-of-its-kind thing.
Who's involved?
It's a big collaboration. Think major exchanges like Coinbase and Binance, payment giants like PayPal and Stripe, plus law enforcement agencies.
So what does it do?
They're building this shared infrastructure to flag and block illicit transactions before the money gets laundered. It directly tackles that financial crime risk, which has always been a major hurdle for institutional adoption.
Makes sense. If you can reduce the risk of dealing with stolen or illicit funds, it makes the whole space more appealing.
Exactly. Binance's chief compliance officer basically said, these kinds of public-private partnerships build trust and security, and those are the cornerstones for broader crypto adoption. It shows the industry is maturing, getting serious about security.
Okay, so this really paints that picture clearly. The divergence between the ETF fast money selling off and the corporate slow money accumulating and building infrastructure.
Yep. Tactical investors reacting to short-term swings versus corporate treasuries playing a multi-year game using dips to build core positions.
So the institutional world isn't just one big block anymore.
Not at all. It's bifurcated. And while that fast money will keep driving short-term volatility, that growing base of slow money, the long-term holders, could provide a more stable demand floor over time.
Which might mean future downturns aren't quite as severe.
Potentially, yes. It could dampen the severity of future bear markets if that slow money base keeps growing and holding firm.
All right, let's switch gears a bit. Beyond all the market action, there is some really fundamental stuff evolving on Bitcoin's actual network, a kind of technological renaissance happening.
That's a great way to put it. What's happening with Bitcoin's Layer 2 ecosystem is pretty fascinating right now.
Layer 2s. These are protocols built on top of Bitcoin to make it faster or add functionality. Right?
Exactly. And the total value locked, or TVL, basically the amount of crypto committed to these Layer 2s, it's just exploded. It's up 105% in just the last 30 days.
Wow, doubled in a month. How much is in there now?
It's exceeded $2 billion. Projects like Merlin Chain, that has about $1.14 billion itself, and BitLayer, with around $250 million, they're leading the charge, often helped by incentive programs to attract users and capital.
And this is part of that broader BTC-Fi trend, Bitcoin DeFi?
Yep, the whole BTC-Fi sector, it's jumped something like 22 times just this year, in 2024, from around $300 million to over $7 billion now.
That's huge. So it's really about pushing Bitcoin beyond just being digital gold.
Absolutely, making it more active, more programmable.
Speaking of programmable, there's this new project making waves, right? Bitcoin Hyper.
Yes, HIP here. They've raised nearly $12 million already in their pre-sale, which is pretty significant. Their big idea, their key innovation, is integrating the Solana virtual machine, the SVM.
Okay, why is integrating Solana's tech onto Bitcoin a big deal?
Because Solana is known for really high transaction speeds and advanced smart contracts. Bringing that capability to Bitcoin aims to tackle Bitcoin's historical weak spots. Its relatively slow speed, like 7 transactions per second, and its limited native ability to handle complex applications.
So if they pull this off...
If they're successful, yeah, it could unlock a whole new range of decentralized applications, or dApps, on Bitcoin. Think complex DeFi, NFTs, gaming, all built on Bitcoin's super robust security layer.
And the strong pre-sale suggests people believe in this vision.
It seems so. Seeing significant buys, even from large whale wallets, shows there's real conviction that this kind of technological leap could be massive for Bitcoin's utility.
Okay, but this kind of change, big institutions getting involved, major tech shifts like Layer 2s and SVM integration, how does the core Bitcoin community feel about this, particularly the maximalists?
Yeah, that's where the friction comes in. There's definitely tension. Bitcoin maximalists, their roots are deep in self-sovereignty, not your keys, not your coins. They tend to be inherently skeptical of large institutions.
Because institutions do institutional things, like using custodians for ETFs.
Exactly. Products like ETFs, where you don't hold the private keys yourself, are often seen as sort of betraying Bitcoin's core principles. And even some Layer 2 solutions might be viewed with suspicion if they seem to add complexity or rely on different trust assumptions.
But at the same time, institutional adoption is accelerating. You mentioned that research showing 83% plan to increase crypto allocations.
Right. So this tension isn't just philosophical talk. It could actually impact things like network governance down the line, how future development priorities are set, especially as Bitcoin gets more intertwined with traditional finance. It's a debate about Bitcoin's soul, in a way.
What Bitcoin is meant to be.
Precisely. And what we're seeing is this fundamental narrative shift underway. Digital gold is still powerful, no doubt. But the really dynamic developments, where the energy and capital are flowing now, it's all about utility, scalability, programmability.
How Bitcoin can do more stuff.
Exactly.
Yeah.
So projects like Bitcoin Hyper, they're not just aiming for slightly faster payments. They envision Bitcoin as this programmable base layer for a whole new financial system. They're directly challenging platforms like Ethereum.
And that dramatically expands Bitcoin's potential market, its total addressable market, or TAM.
Absolutely. If this tech renaissance really takes hold, Bitcoin's value wouldn't just come from being a scarce digital commodity, a store of value. It could also be valued based on the economic activity happening on top of it.
Like valuing a company based on its future cash flows.
Kind of analogous, yeah. Valuing the network based on the discounted value of the activity it enables. That provides a much stronger and potentially much larger foundation for its future price.
Okay, let's try and synthesize all of this. Bringing it all together, our deep dive really shows Bitcoin is at this critical point, caught between these strong long-term bullish forces and some really sharp short-term bearish pressures.
Yeah, it's definitely a more mature market now. You see different players acting on completely different timelines. The long-term outlook, you have to say, looks increasingly optimistic.
Because of.
Well, you've got the Fed likely easing policy. You've got a more supportive regulatory environment emerging in the U.S., reducing some systemic risks, and then this huge technological evolution with layer twos and programmability really taking off,
Yeah.
transforming Bitcoin's potential.
But those long-term wins are just getting battered by the immediate storm.
Right now, yes, those record ETF outflows $1.17 billion in a week, plus the $116 million in derivative liquidations, that's heavy selling pressure. It pushed Bitcoin below key support down to a 6-week low.
And the fact it couldn't even rally on good macro news from Powell just shows how dominant those outflows are at this moment.
It really does. So the outlook right now is, I'd say, cautiously optimistic. We're probably stuck in a period of volatile consolidation, choppy waters,
Until when?
until that selling pressure, mainly from the tactical ETF crowd and leveraged traders, gets fully absorbed. Once that selling exhaustion happens, then those strong underlying fundamentals we talked about should have room to breathe and reassert themselves.
Okay, so what does this mean for you, the listener? Let's break down some strategic considerations for short-term traders.
Extreme caution is probably warranted right now.
Yeah.
That headwind from the ETF outflows is very real and very significant.
So watch those key support levels around $110,650 to $111,500.
Definitely. And critically, keep an eye on the daily ETF flow data. Look for stabilization or ideally a clear shift back to net inflows. Trying to catch this falling knife before that happens seems like a high-risk game.
Okay, what about for longer-term investors, people looking to accumulate strategically?
For them, this current dynamic could actually be a significant opportunity. Think about it. This consolidation, mostly driven by fast money de-risking, is happening while the long-term fundamentals are arguably strengthening.
So an easing Fed, expanding utility.
Exactly. So the current price weakness might be a strategic window to build a position at a relative discount before those longer-term catalysts get fully recognized and priced in by the wider market.
And you said the most critical signpost for everyone, really, is that daily ETF flow data.
I think so, yes. In the immediate term, that's the clearest signal to watch. A sustained flip from outflows back to inflows would likely indicate that the current wave of selling pressure is over. That could be the trigger for a price recovery.
So bringing it all home, thinking about that philosophical divide between the maximalists and the institutions, and this whole transformation of Bitcoin from just digital gold towards a programmable network, how do you see those different visions shaping Bitcoin's ultimate role? Will they clash or converge?
That is the multi-billion, maybe trillion-dollar question, isn't it? How these powerful, sometimes conflicting forces, the original cypherpunk ethos versus institutional finance, scarcity versus utility, ultimately shape Bitcoin's destiny. It's something worth pondering as this whole story continues to unfold.